In this video, I'm going to share with you how to trade and avoid spikes on Crash 500 index. So I want you guys to pay a close attention to what I'm about to share with you right now. You can see that we have three indicators on our chart right now. I'm going to share with you how this indicator works before I show you the parameters and the settings for this indicator. All right, now we are on Crash 500 index and this market is highly volatile. Okay, this market is highly volatile. So we zoom in, we're using the third zoom level. So here the zoom out is 1, you zoom in twice after you have zoomed out, then 1, 2. So this is the third zoom level. All right, if you take a look at this point here, we're seeing that there's a green and there's a red line. But before we go deep into this, let's take another zoom level so that we can see what I'm talking about clearly, so that you can see what I'm talking about. Okay, but know that we're using the third zoom level to trade this market, but just for this teaching sake, I'm going to zoom in a little bit so that you can see what I'm talking about clearly. Now I'll zoom in a little bit. Now this is fourth zoom. Okay, fourth zoom is still good. All right, now this is green, this is red, this is green right here, this is red. Now this black line is the MACD, this upwards and downward black line is the RSI at level 90, level 10 here. All right, when the MACD is on a downtrend, there's a spike on the market, meaning that the market would spike. So there's a higher chance of spikes coming in. So that spikes means this red line dropping in price movement often during the downtrend of this MACD. All right, and when this MACD gets to this level here of 90, the market would sell. So we're expecting a sell when it gets to this level of 90. But that's not the main point with this strategy. This candle, this line, this green line here, this green line is called the accelerator oscillator. Now when this green line is upwards, all right, when it's upwards here, you can see that at this point of the MACD is about to end its trend, meaning that the MACD at this point here is about to go upwards, meaning it's about to create an upward trend of the MACD, because here this downtrend is now becoming an end. Okay, it started to create an end, then towards the upward side. So here we place a buy. If you see here, there was a spike. After this spike, we place a buy at this point, and this buy we're placing is taking about 5 or 4 candle ticks. Remember, we're not staying long on this market to avoid the spike. Okay, now we place a buy here. After we have placed a buy, we take 4 to 5 candle ticks, then we exit from this market. Then when we see that this one has gotten to this level here, level of 90, this accelerator oscillator, once I've gotten to this level of 90 here, we're going to exit the trade, because this red line signifies that spikes will be coming in the market. Now if you take a look at from this point here, from here to this point here, this is when the spike came through in the market. From this point here, okay, from here you can see from this point here, then it took about, let's say, about 10 candle tick before the spike came through, right? But in some instance it may not be like that. The spike may come through sooner after the red has appeared, or after this green line is above one of these other ones. Now let me show you what I'm talking about here. You can see that this is a red line here of the accelerator oscillator, and after 2 candle ticks there was a spike here. When it goes to this point, there was a spike at this point, right? Now take a look at this point as well, point here. Remember that this is the downtrend of the MACD and there's a lot of spike, right? Here, level of 90, there was a red line, the spike came through. So the red line signifies spikes on the market. All right, take a look at this point as well. There was a green line, then after the red, spike came through in the market. I hope you understand what I'm saying here. Okay, it was spike at that point. So this indicator can help you detect when there is a spike and when there is not a spike. And you should pay close attention to this MACD as well. So whenever you see a green line going upwards and the MACD is in an upward trend, the spikes, the opportunity of spikes coming to the market is going to be minimal. But when it's a downward trend, the spike that's going to be on the market will be, we will be expecting more spikes on the market. Okay, we'll be expecting more spikes on the market. Just as you saw here, it starts creating a downtrend. There were spikes here, 2 spikes, downtrend, red line at that point. Okay, just as you can see, downtrend of the MACD, upward trend of the MACD. At this point here, you could even use only this accelerator oscillator. So if we remove the MACD, for example, right here, we'll remove the MACD. Let's say you are using just the accelerator oscillator. Here, you place your buy. You take about 4 candlesticks. You exit immediately. It has gotten to this level of 90. Because this red spot here signifies that there will be spike on the market. You can see the spikes on the market. This is a big spike, a red line here. You place your buy at this point, immediately you see a green candle, a green line going upwards for the accelerator oscillator. Immediately there's a crossing. Now immediately you see that one is higher than the other of the green, you exit, because the red lines is going to be spikes, meaning that spike will be coming into the market. Here there's a red line here, the spike came through. All right, you place a buy at this point, it goes upwards, there was a red line, you take just 2. And just to be safe on the market, you could exit at this point here. Okay, you could exit, and when you see that the next line that follows is not red, you could place another buy. Again, you can place another buy. But when you see that after there's a red, the next line is a red, the next line is red, meaning that there will be spike coming into the market. So it's just giving you a signal that spikes is going to be coming into the market. So that will give you an opportunity to avoid the spikes that will come into this market. All right, now let's go over to the parameters. For the RSI period on 14, the levels are 90 and 10. The style is black color on 3 pixels. The style here, 4 pixels, color blue here is on 4 pixels. Then for the accelerator oscillator, the volume up is 4 pixels and color green. The volume down is 4 pixels and color red. You don't add any levels, then you click on done. Okay, for the MACD, if you want to add the MACD, remember you can trade this with the accelerator oscillator and the RSI alone. But if you want to put in the MACD so that you can use it together with the accelerator oscillator, you can put on the MACD on fast EMA for the parameters on 14, slow EMA 24, just as you can see right here on my screen. The main is going to be on 4 pixels, the color is going to be on black, signal 4 pixels, color red. Then you click on done. Now this is for crash 500 index alone. Now before you use this strategy, make sure you practice it properly before implementing it on your trade. So do not just carry this strategy, do not just use this strategy straight away on your trade. So always practice first before implementing any strategy that you see here on this channel. Right now, if you found value in this video, do it to like and subscribe. I will see you guys on the next video.